Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, the 24th of July, 2007, and the market's closed. And we had a pretty good sell-off here today. The spiders lost $2.80, down 1.8%. And once again, we saw a heavy increase in the volume on the downside. So the sellers are really starting to make their presence known in this market. And it's good to note, or it's interesting to note, that this inverted head and shoulders pattern that I've been pointing out for the last few weeks has now failed. And from failed moves often come fast moves. This market is, in my mind, potentially in a lot of trouble here. I don't want to sound like an alarmist, but we do have this trend line that perhaps is going to offer a little bit of support down near that 150 level, and you know, from there we'll have to just take it day by day. I don't want to be somebody who calls the top, because there's enough people out there that call the top after every little sell-off. But this one is starting to worry me a little bit more. We do still have a rising 50-day moving average, but just based on the fact that this move failed in here, I think we do have the potential for more of a sell-off. And I've been cautious the last couple days. Yesterday I was noting that the market came up to its declining 5-day moving average, and that I would really become basically the direction of the 5-day moving average, when it's lower like this, usually indicates further weakness to come in the intermediate term. Today we saw the market break down through that 153.85 level that I thought was important on the open, and tested that 153 level as well. Kind of held in there for a little while, but at the end of the day it really broke down hard through there. I thought it might just lead to a move to 152 or so, but the selling became a little bit more aggressive than that. Now I think that we've got to keep an eye on this 150, 180 level, and then, like I said, on the daily time frame, probably down towards 150 and a half is where we might find a little bit of support near that 50-day. I'm not sorry, the 50-day, but the uptrend line here on this daily time frame. So a lot of reason to be concerned here. And then if we take a look at the IWM, this market last week was the one that I was a little bit cautious on, because it failed to break out past that 85 level after numerous attempts. And from that failed breakout came a test that I wasn't expecting it to go this low. In fact, I was looking for the possibility that it was going to get back down towards 81 and a half, which would be right about here. The market broke below that 81 and a half level, and now I think it puts this 200-day moving average into play right around the $80 level. So we've had a pretty severe sell-off the last 4 or 5 sessions here in the Russell 2000, and it's coming into an area that this area here ought to act as support, but I think that 80 and a half is a level that a lot of people are looking at, so that the obvious levels aren't usually the ones that hold. So this old resistance, which did become support in here in 80 and a half, might be just kind of a bluff test right there, and then we get a further sell-off down to 80 bucks a share right near that 200-day moving average before any real bounce does start to materialize. But you can see again the direction of the 5-day moving average was lower. I mentioned that yesterday, and that I said that the sellers were in control here, and this might be a market that more aggressive traders might look for short sale opportunities. So the market is getting a little bit extended to the downside in the short term here, but no reason to be a buyer. You don't want to be an early buyer by any means when a market is kind of just caving in like this. The market will give you plenty of opportunity to get involved. The daily time frame of the S&P, or I'm sorry, the semiconductors is still in a good uptrend. However, like I said, I've been saying the last couple of days that the market gave us reason to be out, and hopefully that you were out and locked in some of your gains in the semiconductors. But the 20-day moving average, I thought maybe the 20-day moving average was going to be tested, but I also said that I wouldn't be surprised to see that 38.50 level tested, and that's exactly where it looks like this market is heading. Again, in here we have a declining 5-day moving average, which is never a good sign for the market. It did break below that support level that we were looking at. I said, breaking below that 39.70 and holding below that for a half hour. So obviously there was no ability to get short right there. However, on the subsequent rally, and then once it made a lower high and then a lower low, there was a good short sale opportunity in the semiconductors right there. And finally, in the Qs, if you were reading my blog this morning, I was putting up a lot of charts of the of the Qs rather on that 30-minute time frame. Daily time frame still looks good. Looks like it's coming into this level here at the 20-day moving average, near $49 a share. But again, the pattern that I've been looking at here, and it's still outlined, is this head and shoulders pattern. I started talking about that I think on Monday, and sure enough, we had a breakdown, a gap lower. It tested the neckline right in here. I cautioned don't chase that. Instead, look for a rally. I thought it would fall short of the $50 level. It came up to about 50.05, 50.10 or so. And then I put another chart out, said, will this act as resistance? If you're short, put your stop up here at $50.20. The market did turn lower from there and just caved in completely. Took that neckline right out. And now it does look to me like it's probably headed for at least that 48.60 level that's projected from the height of this head and shoulders top. So 48.60 is going to be our target for the short term. There's no reason at all to be a buyer in here. The market is a little extended to the downside today with its 74-cent or 1.5% loss, but there's no evidence that it's starting to bottom. If you're a very aggressive trader, perhaps you want to trade it on a 1-minute chart or something like that. But look at the 1-minute chart even here today. The market was strong. It wasn't strong. It gapped lower, held up above this daily VWAP. But when it broke that VWAP right here, that's when it broke down, and really that's when the real selling began.